Hey, what's happening, guys? Dan Darrow here with another Options in Play video update. Today's video is going to fall into the quick hitter category. That's what I like to call these updates on developing plays. So I haven't talked about this one much since earnings, either on video, obviously, or in the nightly letter. So want to revisit the idea uh, while it's setting up and talk about some similarities right now to another position of ours recently, the HDP. So I'm sure you guys have noticed that some of our trades begin as earnings event trades and turn into swing trades. So basically, what that means is we will get into a setup because of an event. So we like an event setup, and then if it plays out, basically in line with our thesis, we typically like to ride the position as long as that thesis holds. So, uh, I'm sure you've noticed before, something that was a very very near term trade starts to work well and it turns into a longer term swing. Um, so what we like to do is trim and manage along the way. So if it's a quick a quick jump or a quick drop, you can manage right away. But then um, you kind of like sit and let it develop and let it ride and let it marinate, and something that basically jumps or has like that initial catalyst, can turn into like a nice trending trade, and ends up something that we sit in for a few weeks or even a few months. So comparatively speaking, CLDR, it hasn't been too long of a hold versus some other names, but this is one that's turned into an earnings trade that is still open up about 3 weeks later, 3 4 weeks later. I really like the risk reward for call position going into this earnings for a couple reasons. First off, software sector was acting great, and also peer, so Hortonworks, HDP, closely correlated peer, uh, had a really nice report and had a pretty big gap as well. So additionally, like CLDR was down near like the low of its range, had support underneath down here. So it just seemed like it was an interesting risk reward for bull call position. So obviously, as you can see, the company delivered strong numbers. Stock gave a big, nice pop, um, and so like this quick move up past 1750 allowed us to roll the preliminary position, which was a November 17th, 1750 call, basically right away. So you get the nice quick move, you can roll immediately. So in this case, though, instead of rolling to a November 20 strike call, wanted to play like this strong momentum and rolled instead to a an October 19th 20 call. Partially so to ride the momentum, but partially the shorter expiration because the implied volatility was so high at that point because of like the sharp pop, that it didn't want to pay like the really elevated prices after the big move. So it went with something like shorter term. Um, and basically, we wanted to roll because you can see going out a little bit longer, there's a really well defined gap here. So that also factored into why we liked like the bull call position into earnings. You can see April was a disaster, stock got destroyed, and this quarter it got through the 200-day, cleared. This was where it was on going into June results. You can see it cleared above that. So overall, like longer term, there was such like a well-defined gap that wanted to at least see if momentum was able to drive this higher. Maybe past 20 and further into like that gap from April. What's happened though, as you can see, is that stock is kind of stalled after a few weeks, and it's basically right where it was the day of earnings, more or less exactly. Um, it's consolidated around 1750, 18, and still really looking for that next leg up. What's interesting though is that this is actually very similar to what Hortonworks did after it reported. So as you can see, CLDR. Now let me pull up HTTP, and if I back out some of this data, you can see that it's very, very similar. It had a quick move, pulled back, and then consolidated. So you had like a really strong run right out of the gate, pulled back, and then consolidated. And as you know, the people that were in it know Hortonworks had a little bit of a head fake. You know, it popped to the high and then dropped below, but then basically once it decided to go, it really, really went. And CLDR now, to go back to it, it's kind of in that setup. So it popped, dropped, now pulled back, and it's consolidating. And you know, if it can get through 1850, 1875 with volume and hold, and you know, hopefully it doesn't have like the shake and bake like HTTP where it dropped and took out the bottom of the support. But basically it has this similar consolidation after strong earnings, and if it can get going, I mean, Hortonworks had almost a 20% extension when it finally started to go. So from here, 1850, 1875, and that should put CLDR well past 20. So still about a month left for the October 1920 call. So there's still plenty of time, plenty of opportunities for this to work its way higher. Interestingly, bulls have been going after some really longer dated in the money calls, like February calls. So there's definitely interest even at these levels, but really it needs like that power volume push, the really strong push through resistance here to get momentum going again. So keep an eye on it. We'll see if you know, software kind of consolidating. Let's see if the sector gets that next leg up. It's really been a fantastic trending group. So we'll see if CLDR participates with the next leg higher in the software stocks. As always, love hearing from you. So please reach out, questions, comments, pass it along. Try to answer them in videos. So please pass along those comments. Have a fantastic day of trading. Great night, and I'll talk to you guys tomorrow.